Hi everyone and welcome to the course of Investing in Canada. The objective of this course is to help you make your investments in the most efficient way. So this whole section is dedicated to different types of investment account. So in the previous videos we have covered tax-free savings account and we have covered RRSP, Registered Retirement Savings Plan. In this video we are going to talk about RESP, Registered Education Savings Plan. In the future videos, we'll be talking about the new tax-free savings account for housing and margin accounts and non-registered accounts. Okay, so let's continue. If you haven't done it yet, please subscribe and activate notifications for more videos like this. Our channel is EduFin Wizards on YouTube. It helps us if you do that. You can also get access to the complete course on Udemy or Skillshare. The links are in the description. So let's begin. So what is RESP? RESP is an acronym for Registered Education Savings Plan. So you can imagine it's an investment account for your kids. It's not for your education. It is an investment account that you start for your beneficiaries, that are your children. You can open this account for your children who are the beneficiaries. You can contribute up to the total maximum amount that is dictated by the government. We'll discuss that. But up to the maximum amount, you can contribute that much to this investment account. These contributions can be invested in stocks, bonds, mutual funds, ETFs, or REITs. All investment income, dividend, interest, the growth that you have are tax deferred. So how does it work? You open an investment account for your children. You start contributing in it. Whatever gains you make in that investment account, that will be tax deferred. That is, your children have to pay taxes on that, not you. Okay. So withdrawals can be used for education of your beneficiaries. So beneficiary can start withdrawing for their educations. Withdrawals are treated as an income of your beneficiaries. So that's a key difference. When you start an RESP account for your child, right, the child grows up and starts the education, they can then start withdrawing money from RESP account that you started, and that withdrawals would be treated as their income, not your income. This is a key important point. The federal government adds to your RESP savings each year through the Canada Education Savings Grant. So what do they do? They match 20% of your investment. So if you're, let's say, putting $1,000 in, they will match 20% of that, that is $200, and give it to you, and that can be invested too. So in total, if you're investing $1,000 each year, so $1,000 your money, $200 government money, combined $1,200 gets invested. So this is a key point. This education grant that you receive from the federal government, that is the matching program that they have, is a very important key differentiator for this program. This is a very powerful program that RESP has. It can be opened with a bank, broker, mutual fund companies, etc. Okay. RESP contributions, the total lifetime limit that you have in RESP contributions is $50,000 up for one beneficiary. So maximum you can contribute to one beneficiary, that is one child, is $50,000. Okay. Now there is no yearly limit. You can contribute $50,000 in one go, or you can contribute $50,000 in a staggered way, right? Contributions to an RESP can be done for 31 years and the plan can stay open for 36 years, after which it expires. Now, how does the government grant work? So CESG, that is the federal government, provides 20% of the Registered Education Savings Plan contributions up to $2,500. That means you get up to $500 matching from the government, right? So whatever money you put in, they match 20% of it up to $500. So to max out this grant, you have to put in $2,500. So if you put in $2,500 of your own money, then the government is going to give you $500 of their money. In total, $3,000 get invested. Children from middle and low income families might be eligible to get additional amounts of CESG. So an extra 10% or 20% is added to the contribution. So if your income is $50,000 or less, you get $100 extra. And if you have income between $50,000 to around $100,000, you get $50 extra. The maximum CESG that can be received in a lifetime of a beneficiary is $70 to $100. Now, what about withdrawals? Only the person who sets up the account and made contribution can make withdrawals. They are known as the subscribers. The students called as the beneficiary can't make withdrawals. Withdrawals of contribution made by the subscriber are called post-secondary education payments, PSE. They can be sent to either the subscriber or the beneficiary. Withdrawals of the government grant portion is known as education assistance payment that can be only sent to the beneficiary. So what does that mean? That they need your permission to access this account, and once they have the permission and once they are enrolled into a accepted post-secondary program, they can start making withdrawals from this account. The subscriber must provide the financial institution who holds the RESP with proof of enrollment confirming the student is enrolled in either a part-time or full-time education program. Proof consists of an offer letter, a course confirmation, or other information that shows that they are enrolled. PSE payments aren't taxable, right? Because that's the gain that you have made. The students will be taxed on EAP withdrawals, that is the grant withdrawals. The financial institution issues a T4A statement, right, for the EAP payment only. The subscribers' contributions can be withdrawn in any amount. There is a limit of $5,000 in the first 13 weeks of school. After that, you can withdraw the whole amount. So this is the key point, $5,000 limit, right, for first 13 weeks of school. After that, you can withdraw the whole amount. Once 13 weeks has passed, you can withdraw the total amount. Each beneficiary can receive a maximum of $70 to $100 in government grant or $3,600 for part-time. Anything in excess of that must be paid back to the government. Okay. Where can you open an RESP account? You can open it with Wealthsimple or Wealthsimple Invest or Trade. If you don't want to do it, like if you want an automated investment, Wealthsimple Invest is a good option. If you want to add stocks that you like or investments that you like, Trade is an option. You can also open it with banks or like RBC, TD, CIBC. You can also open it with insurance companies, okay, like Sun Life. So let's look at a case study and try to understand how does RESP investment works. So it's a simple plan. You open it for your child, you start contributing amount, right? Government matches 20% of your contributions up to $500. That is, to max it out, you have to put $2,500 each year, right? And all of the money gets invested, it grows, and when it matures, they can use it, the beneficiaries can use it for their education. So let's look at a case study where what happens if you have invested $2,500 for the next 18 years and the investment return is 6.88% in a diversified global stock fund like VT. What will happen to that? So we'll look at how the things work, but total amount invested will be $47,500. Total grant, maximum grant you receive is $7,200. And the fund value will be around $115,000 if the expected rate realizes. So let's look at the Excel sheet to understand it better. So what is happening? The child is born, and for the next 18 years, you're going to invest $2,500 each year into his or her RESP. So $2,500 is your investment. You get a 20% grant from the government up to $500. So 20% of 2,500 is $500. So you max out the grant by putting this investment in. So your total investment in this year 0, is $3,000, right? 2,500 your own money, $500 grant. So this $3,000 get invested. This is invested at 6.88%, so it grows to $3,206. Next year again, you put $2,500, you get a grant of $500, you invest $3,000, then the previous year plus this year grows and you get $6,600. So these keeps on happening until you exhaust the grant. The grant gets exhausted when you hit $7,200. After that, there is no grant. Okay, so you keep on investing and you maximize the grant. So $3,000 for 13 years. After that, $2,700 gets invested because the grant last year is only $200, and after that there are no grants, so $2,500 your own money you keep on contributing. So if you do that and you realize a 6.88% investment return like we have done in past, then the fund value should be around $115,000. So by contributing $47,500 of your money over the next 18 years and receiving a grant of $7,200, which gets invested along with your money, you end up with $115,000 for your child's education. Okay, and this will be treated as their income when they start withdrawing, not your income. So you don't have to pay taxes on this amount. Okay, so just to summarize, total you invested $47,500, total grant you received $7,200, and $116 was the total fund value. So this is a very powerful account, RESP. If you have a child or planning a child, like think about this account, research more about it, right? And I would highly recommend to start it because the grant portion that you get from the government is a real kicker. It gets invested along with your money. So it is like 20% free returns you're getting from the government, right? Plus it gets invested. So there is compounding effect. That's why you get $100,000 plus if you max it out, right? And the returns are realized. So if you like videos like this, please subscribe and activate notifications for more videos on our channel. The channel is once again EduFin Wizards on YouTube. You can get access to the complete course on Udemy or Skillshare. The links are in the description. Thank you very much. See you in the next video.